Ripa. Hey, good morning, traders. It's Wednesday, November 18th, 2015. Let's talk some Forex, huh? Let's go. Forex trading ideas for today. Search now. There it is. Forex.today. That's where we're meeting, huh? Hey, thanks for coming to Forex.today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So good or bad, please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that gives traders access to the Forex market, but also energies, metals, and indices, and binary options, and everything good. 7:30 in the morning, approximately London lunch, 2 hours before the New York equity market open. This is a good time to get together as a team, as a community, and collaborate and share ideas. I love technicals, I love fundamentals, I love scalping, I love swing trading, I love position trading, I love building portfolios, central banking. My gosh, love it all. So I'm here to answer questions and to be your guide. If you want to attend these events live, simply go to Forex.today and register. It's that easy. And while you're there, at least a dozen trading ideas are posted every day by our analyst team stationed around the world, watching the markets 24 hours a day and posting their thoughts for you for free. Lovely, told your mom. You guys ready to do some trading? Ready to get to the live market? Well, let me clean up the office a little bit. Just got to move some things around. Vacuum under the chairs. Over there, it's still dirty over there. Clean that up. So again, welcome to Forex.today. Alrighty then, stock market. How lovely. This is the S&P 500. It's a benchmark. It's a broad index. Very often what you use is the S&P 500 to kind of critique or not critique, place a value on performance of what you're doing. So like one of the things you could do is you could say, you could take the value of the S&P 500 and let's say how much it moves. And if you were picking an individual stock, if you were a portfolio manager, for example, the question is how much better or how much worse did that individual stock perform versus what the broad index did, the S&P 500, which is an index of 500 different stocks. Okay, one would have a high beta, one would have a low beta, that kind of thing. So it's important for not just, whether stocks are going up, but, relative. Can you imagine if you're a hedge fund manager and you had to report that, you returned 8%, but the stock market was up 12%? Hey, you still made 8%, right? Well, but relative to the S&P 500, you didn't perform that well. So it's important to a lot of different people and for a lot of different reasons. Anyways, generally speaking, if the stock market is going up, it's a good thing. If you look left, right, you see all this area in here. Now, we actually marked this up a long time ago, a couple of weeks ago, this area here. And we came up and we visited that area recently, yesterday. And if you were a bear, you would sell it, correct? Okay. So if the market was going to turn bearish, it would turn there, and we would be doing this, right? If the market was bearish. Here, I'll put it this way for Pow. Is that better, Pow? Hope so. All right. So if the stock market fell today because of this test here, what used to be support is now resistance. If the stock market falls today and tomorrow, what does that mean to the Euro USD? Okay, good. So is that something that you're watching right now? Okay, so we'll zoom in a little closer here. And I think this pivot was pretty important. So the question is, how's the market going to play it now? So we had this giant drop, which would be expected because that was resistance. I mean, I don't know, that's what it's supposed to do, right? Asia brings it up into the daily central. If you were a bear, you would drop it like it's hot, right? I mean, that's what you would do. I don't know, that's it. It's a 382, it's a central pivot, it's a, whatever. So Asia brings it down and fails to make a lower low. And what do the London boys do? They buy it low. Because remember, you're only supposed to buy low and sell high, right? So Asia sold it high. London bought it low off of a daily pivot. Okay. Now the question is, what happens in the near future, right? Some may consider this a higher high. If there's enough bulls, then it could head up. But really, we haven't made on a more of a macro level, we haven't made a higher high yet. We're not even near this area here, right? So remember, the sell zone, if you're a bear, because you're not going to swing both ways like a broken gate, are you? Right? If you're a bear, you're a bear. If you're a bear, this is an irresistible sell zone. You see? I mean, that would be absolutely, totally irresistible. In fact, what you could have done at the end of trading yesterday when the market closed, you could have just put, 3 orders, or let's say 2 orders. Sell at 382, sell at 618, and you're done. That's what you did. That was your day. Took you less than 30 seconds. If you were a bear, right? Because it hit your resistance, dropped like a ton of bricks to confirm it. So now you're going to sell the lower high. So this is your sell zone, not a problem. Easy, right? So it depends on what you are. Now, if you're a bull, you're going to try to scalp your way up. Okay? Oh, yeah. Isn't that a sad... Look at this sad story. I missed the entry. Damn you, S&P 500! I'll get you yet. Let's back out a little bit. You can see pretty easy, right? Look how close that is. Ah, oh, you scumbag. Little kicker. Beautiful. And I remember talking about this at that time too. Like it just had to go up or it was seriously bad news for the rest of the world, right? So like, you know, I don't know. Guess I should have bought the 382, not the 50%, huh? But you understand on the higher context now, okay, let's draw this. Does anybody think that this is probably what's happening right now over the course of now to the end of the year? And remember the markup here, let's change this for Powell. Okay. Oh, that's too dark, Powell. But this is what's in play. Used to be resistance, now support. The Stokes is the kicker. Anything for you, Powell. All right, but you see? So if you believe that's what's in play, how do you, on the longer term, what do you do on the shorter term to support that new trend? Suppose that's what's going on, right? So then we zoom back in. All right. And maybe you fib this if you're a bull. Okay. So we got this little bounce here on the 4-hour 200 EMA. It wasn't a 382. It was something. There's a little weekly pivot. Maybe it's enough. But the theory is if we're going to follow the macro trend, which is eventually work its way up, then maybe, you know, we're looking at this for now. Maybe? Is that what's setting up? Yeah, Joseph, that's a limit order down here. I missed it. I think by 2 points. So it's not quite perfect, as he's mentioned. Perfect entry. Not quite. I'm not in the trade. It's still a buy limit. So I'm not in it. I missed it. Hey, it happens. But you know, it's interesting to see it there. That at least you can see what I was thinking, right? So I don't know. Just a, you know, a shake of a lamb's tail above the 50%. Yeah, I don't hate it. I'm not married to it. Guess I should have bought the 382. That's all. That's the only way I play it is I look at it and I'm like, guess I should have bought the 382. But so, anyways, now what? Right? Is this what you're setting up? We might want to kind of consider this area here, and that puts us in the 382 50% area. So we'll see. It could go up from here. It could go down a little bit first, but that's our job, right? Look for the timing. So if it made a lower low into here, I would still look for reversal patterns. The 15-minute chart tells me it's going to fall for 2 hours. Doesn't have to, of course. But it could. So on the 15-minute chart, that kind of looks bearish, right? It's, let me get a number here. 92.4% overbought. 92.4% overbought. Okay? Seems pretty overbought, right? Is it making a higher high relative to these highs? No. But watch this. You ready? Boom! And wait, that doesn't look right. Oh, I'm still on the stock market. Sorry. I was looking at a different chart for something else. So anyways, keep your eyes on like the daily 5. Maybe that's another way of looking at it. Let's zoom in here. Oh, again, that's Euro USD. Man, I got them all mixed up. Stock market. Now it's all Euro. So I guess let's go into the Euro now. All right. So how do we want to measure this one? Where are we in the move here? What do you think? Okay. So we came up and basically sold off the 107. What is my take profit for what, Mindigus? Sorry, I missed it. I was working. I was working, honey. TP for what? Don't say cornholio. Oh, why should I take profit? So anyways, I suppose I'll take profit when the trend is over, right? So anyways, right? So let's zoom back in here. Kind of feels like that's what's going on, doesn't it? We met up with the 4-hour 21. Does it seem about right? And what do you do at the 21? Why do we even have the 21 on the chart? What's its useful purpose? What's its utility? What does it all mean, Basil? Dynamics, supportive resistance, yeah, but so how do you use that? So what? Yeah, Jim R is on the right idea. If price is below the 21, you're bearish and aggressive, you sell at the 21. That's why it's there. So if the 21 breaks, yeah, I might take a walk. I might take my profit. You could see I had actually, there you go, for Minigus. I actually had it here at the weekly S2 at 106. So it's actually in the market. But remember, I almost got knocked out with 300 pips, so I moved my stop. I didn't want to get out my take profit order. So, but you know, if it got into that, I mean, it makes sense to get out, right? But So anyways, I'm just looking at the 21. Look at down, sideways to the 21, down, sideways, right? Back to the 21, down, back to the 21, down, back to the 55, down, back to the 21. Hopefully it falls here. If not, I might take my profit. Right? What's it sitting at now? 340 pips. All right. So today, is there anything on the calendar that could affect the US dollar significantly? Yeah, the Fed meeting minutes. Cool. And maybe there's something in there that says definitely no way, never in a million years will we raise interest rates in December, but I don't think it's going to say that. Crude inventories? Eh, well, maybe. You look at oil. Oil's been trading so beautifully. Yeah, building permits, sure. All right. Okay. Selling on the 618. Okay. Lower low, lower high, down. Especially if it breaks through this area. So if oil falls, what happens to the USD CAD? Hmm? Why would you even watch oil if you're a currency trader? Yeah, USD CAD in current market correlations should go up. Okay. So let's zoom in. Okay. This is minute for minute. How neat, huh? So oil reversed down off the 618, 42.50. And off we go. It's just really nice though, up and down, double top, lower low, lower high, lower low. Just like you've been trained, right? Beautiful. Okay. So that's a little oil. And of course, what you should do as soon as you see that lower low, you fib this for your entry. And your sweet spot's always going to be back 3.2 to 618. Cool. But we do that on the currency charts. We do that on high time frames. This is a low time frame. That's a 5-minute. But 4-hour, I do exactly the same thing. Okay. So what do you want to do with gold? Looks like we're already kicking off the 4-hour 5. That's a pretty aggressive drop. Okay, but here's a sell zone. You can see if it comes up to this gray area, it's going to be a roll reversal kicking off the 4-hour 21. That's fine too. And then this old support level is our new 618. Yeah, I'd consider that as well. Remember, if I'm a bear, my job is to identify 2 or 3 levels of resistance in which I may consider selling. So there, I've done it. Job's done. Next. So let's see, we did gold, we did oil, we did the S&P 500, we did Euro USD. Are you ready for USD yen? Yeah, nothing happened today, huh? Yesterday's high, yesterday's low. The low was 123.18, the high was 123.48, so 30 pip range. Amazing, huh? All right, well, just wait until you get what you want. Take a look at the beast. Okay, let's follow the let's follow the line across, all right? The bid-ask line. Let me follow this out. Ooh. What do you think? Could this be a significant price level? Let me follow it out even further. Okay, I got to go way out here now. What do you think? Could that be possibly a significant level? Martin, I'm bearish both on the Aussie dollar and on the euro dollar, on the euro. So I probably wouldn't trade those together. The recent bullishness we've had in Aussie was simply that the central bank hasn't said anything bearish. So I wouldn't give it all, thumbs up. It's pretty fairly priced around 70 cents, 70 US cents. That's a pretty fair price, and the market's okay with that. So this is Aussie yen now. And it's not bearish. It's not necessarily incredibly bullish either, okay? So even though you might see Euro Aussie falling, most of what you see is Euro falling, not necessarily Aussie going up in value. So you got half the equation right, but I think you could probably pick a better horse to bet on. So anyways, there it is, Aussie yen, guys. Our original purchase was down here, if you remember, and I got knocked out on this pullback, and I think that's exactly where my stop was. I think it was 75 pips locked in. So it came all the way down, knocked me out for 75 pips profit, and then took off again. Wah, wah, wah. Boo-hoo. Boo-hoo for you. But, it hasn't done an amazing amount. But, we do have a higher low. It could be the beginning. Okay? But you could see that, it's just not amazing. And maybe it has to do with Aussie. So let's go to Beast. Oh, did it fall again? I don't even have my news up. Here's the Beast. Now let's use this one. Boom, 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 boom. So if you're going to trade the volatility, you're going to look at it this way, right? So it spiked up somewhere between the 382 and 618. You would buy the retracement, right? Pretty simple stuff. Some might do this. Okay. It's all subjective. There's no right or wrong. Some might look at that. So it all comes down to what you want to do. If you're going to buy it, you're probably thinking about it soon. Remember, we used the 21 as the buy zone, right? We already covered this, right? The reason the 21's there is if you're a bull, you would buy it. So it comes down to, at this point, if enough bulls buy it, this will go up. And that's all there is to it. By the way, look at the beast right at the London Open, huh? Boom. So we'll see. If this low and this low might be higher lows, right? In this case, we're supposed to make a higher high soon. Okay. Are you saying the pound gain value for the bond auction? How many bonds did they sell? Probably not enough to move the market dramatically. No. Is there potentially another reason? Yeah. Well, just help me understand why. I'm not agreeing or disagreeing. Tell me your thought. Let's talk. Okay. Well, that sounds pretty good, right, Kenny? It seems believable. Yeah, Broadbent says, cannot promise time of first potential rate hike. The 2-year inflation target, not a good policy guide. Economic data may offer better guide to rate moves than prior Bank of England forecast. I don't know. Nothing major there either. I'm just kind of looking around other things. Well, maybe it's just the London Open. You thought of that? What are my thoughts? In what way? I don't know. I've been talking about it for a year and a half, so I'm not. Are they going to raise interest rates? Yeah, but they told us they would. So other than that, see, I never know what the confusion is. They've told us they are. There's no discussion. I mean, they've told us. They've actually said they would do it. So other than that, I don't really have an opinion. Yeah. Well, what's wrong with it? We're near full employment, right? We're starting to see some wage growth. Productivity and efficiency is as high as it could probably possibly get. There's gonna be competition for employees at this point. What's holding the economy down per se? Let's say the discussions are all external. You have the internal economy of the United States, right? And the United States is 70% domestic. Okay? If Japan stopped buying our bonds, right? This is the big concern, right? What if Japan and China stopped buying our bonds? Well, first of all, their economies would tank. We're not forcing anyone to buy U.S. Treasuries. Japan and China, they're happy. They're lining up. They're begging for more. That's why the United States has such high debt, because people keep giving us free money. So anyways, but the U.S. economy is 70% domestic. So if Japan doesn't want to sell us Hondas, well, fine. We'll just buy a bunch of American cars. Now, it gets a little confusing now because American cars are now European and Asian cars are now American, but whatever. Yeah, I think you get what I mean. At least you're buying domestically, right? But and just imagine, but everything in the U.S. economy now. What if an American only bought something made in America? By an American. It could happen, right? War can do that, right? American jingoism. America's the greatest country in the world, right? And we'll only buy American or you're a commie. So all of a sudden Americans only buy American stuff, so we close our borders. And happens, well, all of a sudden demand for American products go up. Therefore, American factories start investing into higher levels of efficiency through technology and new equipment and stuff. But at some point, that gets maxed out. And the only way that you can add to this new growth is you got to hire more people or make them work longer. Well, how do you, if you're working 40-hour shifts, 40-hour work weeks, and you got the factory pedal to the metal, full productivity, how do you get more productivity? You got to get people to work more. Hey, can you come in on the weekend? No, we closed the borders. Or they're part of the workforce, but they, you know, at some point though, you can't just add more gold, right? What if you're making jewelry? You have a gold factory, right? At some point, what if you can't get more gold? You can't just make more corn if you've run out of corn. You just can't make more employees, especially trained, educated, skilled employees, right? There's only so many. And how do you get them to work 10-hour shifts? How do you get them to work on the weekends? How do you get the good employee from the factory across the street to work for you instead of that one? You pay them more money. Income goes up, further the spending, but the spending only happens in the United States, in U.S. economies, and inflation starts to skyrocket. So if you look at the U.S. economy domestically first, it's doing all right, right? 5% unemployment in this world is pretty good. Now, there's some structural issues where a lot of employees are just unskilled and they don't fit in the workforce anymore. So eventually they starve to death or they get retrained and develop some sort of skill. And the numbers start to work out. As an economist, eventually you still have your 5% unemployment. But Johnny's like, well, 5 is more like 7.2, but the problem is a lot of the people that used to have jobs are just not skilled to handle the jobs anymore. They're not even in the workforce. They're not looking for jobs anymore, and if that's the case, they don't get counted. But the world needs a lot less mortgage brokers than it used to have. And if, you know what I mean? Yeah, they're all YouTubers. So whatever. So this happens, man. This happens. And, you know, in like Europe, right? France has to fire a whole bunch of their government workers that have their lazy government inefficient jobs and replace it, you know, and get those people to do something different, and then get people from Eastern Europe. They need to be making stuff in Western Europe so the factories are closer to the buyers. And, you know, but that's not an easy thing to do. But anyways, if you just looked at the U.S. economy, it's doing pretty good. But then the issues, I think, happen to be external issues, right? Oh, but copper's down. Oh, but gold is down. Oh, but oil's down. Oh, but China. Oh, but Japan. Oh, but Europe. And at the end of the day, America looks around and says, are you speaking to me? Because I wasn't even paying attention. I'm sorry, did you have a problem? Oh, your economy is doing bad? Oh, yeah, that must be really bad. Oh, well. It just doesn't even really matter that much. Like just listen to the Fed officials. What about the falling dollar? What about the falling dollar, right? Or what about the rising dollar? What about the rising dollar? What about Europe? What about the crash in commodities? And they're like, really? I didn't even look at that. Right? Do you ever notice that? They're like, you know, that didn't even come up in discussion. But gold's dropped 50%. Aren't you worried? They're like, yeah, no. Now, keep in mind, they have thousands of PhDs working for them. And it just never comes up in discussion because the Fed doesn't really care, because 70% of the economy has to do with the U.S. So you save the U.S., well, who cares about everybody else? It'll all work out. It'll all work out in the end, right? And so sure, if Japan and China stops buying U.S. debt, fine. Their economies, they go back to the Stone Age, because now they're not selling stuff to America. They better start being really nice to the Europeans, right? And so, and then inflation skyrockets in the United States. At first it looks good because everyone's making tons of money, but then all of a sudden we have to service our own debt, and if inflation goes up, interest rates on our debt goes high, and all of a sudden the United States has to pay 10% interest on all those trillions of dollars it borrowed in the past. Well, to avoid the hyperinflation, well, it's not going to be hyperinflation because you got to start monetizing stuff, and the Fed would have to print money to cover all this stuff. I think what would happen is we would just fire our government and slash everything. And to say, look, we don't care about the global, no more wars, no more frivolous spending. Hey, if you're poor and you don't have a house and you're homeless, I'm really sorry, but there's just no money. We have nothing for you. We have no support. And forget about retirement, the government retirement, forget about Medicare, Medicaid, or all these different entitlements. Just like, we don't have the money. So sorry. Too bad, so sad. There's no more government social support for anything. And we're pretty close to that now, guys. There's just no money. The government at every level. At the local level, right? Your town, your county, maybe the city, the state, the whole region, the whole federal government, and all the different branches of the government and all the agencies in the government. Everybody's broke. I mean, how long are we going to do this? I mean, it's the social experiment is nearly finished. So that's where we would get if all of a sudden we had to shut all our borders down and live on our own economy. At first it would be fine, but then we'd have a lot of inflation, because right now the United States exports its inflation. So suddenly we'd have inflation. Our dollar would devalue or would weaken, but then at some point we would just have to slash all spending everywhere, because there just wouldn't be any money. And then no one is lending us money to pay for that debt, right? Because Japan and China stopped paying for it. So we'd just say, all right, well, no more federal government. We need the federal government to pave highways. But that's what was intended by the founding fathers anyways. There should be a federal government to have a law, to oversee laws, right? To oversee an army, and to pave roads, except they didn't invent paved roads yet. But, that's all it was supposed to do. And everything else goes to the state. The state does everything else. That's how America was designed. Because Americans hate central powers. It took 300 years to even build the Fed. So anyways, John, that's what I think. I hope that's helpful. Look at the Pandora's box you opened, eh, John? Put the lid on quick. So maybe you buy it to 21. How about that? But then again, that's why the 21's there. So if you haven't done it, you're already a little bit late, but maybe you're waiting for a better Stokes or something like that. But look, if you're a bull, guys, and it drops 50% into a 21, you need to buy it. I don't know what else to say. Right? Higher high, higher low, to the 21, buy it. Pound CAD. All right, sure. I would be bullish on pound. I'd be bearish on CAD. I don't think I even look at that one. Do I? Pound Swissy. I don't even have that. No, see, that's not necessarily something I trade. Not against it. It's just, there's so many obvious easy trades on the majors that I just rarely look at a lot of these. All right, so to me that looks terrible. Yeah. Hi, I'm Wayne, and I burst bubbles. All right, yeah, you're up to the top end of the range. Let's see, go to a 4-hour. Just still looks like resistance to me up in here. Welcome to the danger zone. You know, I think what you're going to see here is just weak CAD. If you can get the pig to be strong today, yeah, then we'll break out. If we break out, then I'll look for the pullback. So I think if it does this, which I believe you're telling me it will, then I will wait for the pullback, and then I'll consider buying that dip, and then, oops, I didn't want that, but we'll leave it there. And then I'll buy it up there. So I'll buy it at basically the same price, but I'll buy it tomorrow. Something like that? Okay, Mark, from hold. Yeah. That's pretty typical stuff, right? So yeah, I just yeah, I think I'd wait a little bit. Just really depends on what oil does, right? In the stock market too. So it'd be interesting to see oil drop below 40 today. Wouldn't that be wild? Look at that. 50%, 16218 up. Cool, man. So we're only at 42. Let's put some more time on this thing. So it'd be interesting to see it come up to like 42.50 and down back to 41.50. What about hourly? Yeah, could fall for the rest of the day if it wanted to. 4-hour. Oh yeah. Oh yeah. Zoom in. So it's selling off the 21, yo. Could be interesting, right? If this makes a lower low, could be interesting.
The October housing starts and building permits data in just a few seconds.
This is brought to you by TradeTheNews.com.
Starts one spot at 0.6 million below the 1.16 million expected. Prior advised a little lower at 1.19 million for 1.21 million. Permits at 1.15 million, about in line with expectation. No further revision in the back month permits.
So we're caught between the EMAs.
Single family starts declined to 722 from 740, while multiple family starts saw a sharper decline to 338,000 from 451,000. Single-family permits moved higher along with multiple-family permits.
Look at the 4-hour 5. We've got to get back through that. We're trapped. Okay, that's a bear trap. You see it? We're caught below the 21, but above the 5. Winner takes all. Yeah, same amount of pips. All right, come on, Bubba. Let's make this a 15. Let's make this a 5. Notice up in the top right-hand corner is the S&P 500, and we're printing a green candle here. See if we can continue this up off the hourly 5. If the S&P 500 goes up, euro dollar should go down. At least that's been the correlation recently. I'm just scanning my charts. Dollar index seems relatively strong at kicking off its 4-hour 21, but the only thing is it's a double touch. That's a bit of a sign of weakness. Got my eyeballs on the USD kitty cat. Looks like it got pretty close to 33.50 before wimping out. Cool. So I guess we've got to pull the plug pretty soon.
Evaluate is needed before evaluating their liftoff decision for the December meeting. Just reiterating, the Fed remains data dependent and no decision has been made for the December meeting by the Fed. Fed's Lockhart, or moderates on the Fed panel.
Lockhart talking, Lacker talking. Wow, everybody's talking. Cool. Hey, I wanted to test something today. Would you guys like to go to the YouTube channel and I'll broadcast the stock market open from the YouTube channel? So let's just do a test. Let me get that for you. Okay, so while you're there, you might as well subscribe to the channel. And we'll try it, right? We'll play around with it. See how it goes. Just a little test. And you will be able to chat with me. I will be able to broadcast my screen. and we'll just do a little test. So, you know, I don't know, about 9:15 to about 9:45, and I'll just cover the equity open and stuff like that, and we'll do a test. Does that sound good? Cool. So what I'll do is I'll stop this recording, I'll upload it to YouTube, get that all taken care of, and then I'll set up the live broadcast, and it'll just appear. It should just appear, for example, right there on the Forex.today channel. Should appear here, but it's like a video. If you click it, you can actually go to full size screen if you want, and then super full size screen. Okay? Something to that effect. It should just pop up right in there. Okay, make sure you subscribe. All right, so let's get that done. Let's have a fun test. Thank you for participating today. And I'll see you in a little bit. Okay, like I said, probably 9:15 a.m. Yes, it's 8:36. Just a little bit less than 45 minutes from now. Okay? All right, guys. Peace on earth. May the pips be with you. May our profits be above average. And I'll see you at the Forex.today YouTube channel. Cheers.